Have you ever wondered what inflation is and how it affects you? Let's break it down. Imagine you're at your favorite bakery and you buy a loaf of bread every day. One day, it costs $1. A few months later, it's $1.10. That's inflation in action, the gradual rise in the price of goods and services over time. Now, it might seem like inflation is a bad thing, right? After all, who wants to pay more for the same loaf of bread? But here's the catch. Inflation is actually a normal part of a healthy economy. It's an indicator that the economy is growing. When businesses can charge more for their products, they can pay their employees more, who can then spend more, driving the economy forward. So in a nutshell, inflation is the gradual increase in prices over time, which reduces your purchasing power. Now that we know what inflation is, you might be wondering how it affects you. Well, imagine waking up one day and realizing that your money can't buy as much as it used to. That's inflation in action. It's like an invisible hand that slowly but surely reduces the purchasing power of your hard-earned cash. Inflation turns your dollars, euros, yen, or whatever currency you use into a melting ice cube. The longer you hold on to it, the smaller it gets. This means the cost of everyday goods and services can go up, making life a little bit more expensive than it was yesterday. And what about your savings and investments? They're not immune either. If the inflation rate outpaces your returns, your real wealth, that is, what you can actually buy with your money, diminishes over time. Inflation, while a normal part of an economy, can have a significant impact on your personal finances if not managed properly. So let's explore how you can protect yourself in the next scene. Inflation, friend or foe? Let's delve into that question. Inflation, like many things, isn't strictly black or white. It exists in shades of gray, where the pros and cons heavily depend on the degree of its presence. On one hand, moderate inflation can be a catalyst for economic growth. It encourages spending as consumers rush to buy goods before prices rise, leading to increased demand and stimulating production. This cycle can, in turn, boost employment and wage growth, creating a vibrant and thriving economy. On the other hand, high inflation can flip the script. It breeds uncertainty, making it difficult for businesses to plan for the future and for consumers to make informed decisions. This uncertainty can lead to decreased spending and investment, stifling economic growth. High inflation can also erode the value of money, hurting savers and those on fixed incomes. So, is inflation good or bad? As with most things in life, it's all about balance. Moderate inflation can be beneficial, but too much can be detrimental. If you're feeling the squeeze of inflation, don't worry, there are ways to escape it. In the face of rising costs, it's easy to feel helpless. But here's the good news. You have more control than you think. By understanding inflation and adopting a few key strategies, you can turn the tide in your favor. Firstly, consider investing in assets that tend to increase in value over time. Real estate and stocks are prime examples. Real estate, whether it's residential or commercial, tends to appreciate over the long haul. Similarly, the stock market has historically provided a decent return on investment. But remember, investing isn't without risks. So do your due diligence and consider seeking advice from financial professionals. Secondly, think about ways to increase your income. This could be asking for a pay rise, starting a side hustle, or even investing in your education to qualify for higher-paying jobs. Increasing your income can help you stay ahead of inflation and maintain your purchasing power. Another strategy is to maintain a diversified portfolio. It's not enough to just invest. You need to diversify your investments. This reduces the risk of losing money if one investment performs poorly. A diversified portfolio might include a mix of stocks, bonds, real estate, and perhaps even some commodities or foreign investments. Lastly, keep a close eye on your spending. In times of inflation, it's more important than ever to budget wisely and avoid unnecessary costs. This might mean cutting back on luxury items, shopping sales, or even downsizing your lifestyle. Remember, inflation isn't a monster under the bed. It's a normal part of the economy that we can learn to navigate. And while it can make things more expensive, it also stimulates economic growth by encouraging spending and investment. Remember, while inflation is a normal part of the economy, it doesn't have to spell disaster for your personal finances. With the right strategies, you can not only survive inflation, but thrive despite it.